the late stage is what we will be focusing on first. And the question is, how is the insight from that? In the sense of, what's the innovation framework? What's maybe the approach that we can take from that? And what are some of the ESG factors that are falling into this? So we have interesting speakers joining me here. The first one is Gabriel Navarro-Rubio, who is IDC Ventures member, and they are having a seat in Denmark now. They will certainly tell us why. So big applause for you, Gabriel. Please join me here. While he walks up, next one is Lauri Isotam. He's general partner at Siena VC, Estonia-based, and focused on secondary markets. So we will be interested in what you will be telling us. Welcome. You can already take a seat, make yourself comfortable. Next one up is Pekka Meki, managing partner at 3TS Capital, and they are leading tech company. You're combining Austria and Nordic view. We will be hearing more about that. Big applause for him. And then the person without whom this would not be maybe as lively, it is the moderator Eva R., who is partner at 3VC, who are saying we're supporting founders along the way, all the way. Welcome, Eva.
Thank you. Well, welcome everyone. It's really great to be here and have this topic. So as we just heard, that in the next 45 minutes, we really want to get inspired by the Nordics, see how it is to run a fund that is somehow connected to the region there, and hopefully also get some inspiration. So I am Eva R., partner at 3VC, originally Latvian, so this topic is also very dear to me. For the context, Nordics we will be defining by the Baltics, Scandinavia, and Finland, because I think on the paper Finland is not part of the Scandinavia. But before we dig into the discussion, I would love actually for each of you to briefly introduce yourself and also explain what is your connection to the Nordics. Why are we here sharing the stage? Maybe you want to start, Gabriel.
Perfect. Well, thank you. Pleasure to be here. Thank you for having us. Well, I'm Gabriel. I work at IDC Ventures. IDC Ventures is a venture capital fund focused on companies from Series A until growth. We invest globally, well, basically through Europe, US, and Latin. And the reason why we're here in the Nordics is, talking about the Nordics, it's because we have the headquarters based in Denmark. And some spoiler of what we're going to talk, but it's basically due to regulation because of the LPs over there, which they're very fond of the region and invest into the sector quite a lot.
Thank you. Lauri?
Yes, hi. My name is Lauri, and the first connection to the region is that I come from Estonia. I'm an Estonian national. And I'm a founder and a GP at Siena VC. And Siena does something that is a strategy that is called direct VC secondaries. Perhaps it requires a brief explanation what it is. So most of the VCs invest directly in companies, mostly in participating in the investment rounds, and the money ends up in company. So what we do, we don't do that. We have a different strategy. We buy stakes in companies, but only from other existing investors. So that, in a way, we bring liquidity to those investors who are already in the cap table, be it founders, employees, or maybe early angels. In some cases also maybe other VC funds. So that why is that important? It's important because, the companies stay private for longer. It's quite seldom that somebody exits in 5 years, so that it might be that for an early angel who invested in a company in year one has to wait maybe 10 or 15 years to get the liquidity when the final exit happens. And not everyone has that luxury to wait that long. So that what we do and why we think secondary markets are important is that we try to bring the liquidity closer to the investors. So yeah, that is it briefly. I'll stop now.
Very exciting, and I think we all appreciate players like you coming into the market because there's definitely a market opportunity and need. But Pekka, let's continue with you.
No, thank you. So I was born a long time ago in on a sunny Sunday in Finland, so I think I qualify as a Nordic investor. Our firm was actually originally started by a Finnish investor, German investor, and a UK investor. I joined a few years later. Currently, the funds are in Luxembourg. We have an office here. We have offices all across Eastern Europe, in addition to Luxembourg and Helsinki, and in the US in Washington, D.C., which today is not a good place to be. So my partner arrived on Sunday to Vienna, and he's asking, should I go back or not? We are here, and we invest in the Germanic region, Eastern Europe, and Nordics. We have 2-3 fund programs. The smaller one does tickets of 1 to 3 million, and the bigger one from 3 to about 15 million. So both earlier expansion and growth stage investing.
Yeah. So to sum it up, I think you all have certain LPs from the region, right? And also you all invest in the region, either through primaries or through the secondaries. Okay. So I think the new Nordics is known and perceived as a really success story here in the Europe. And maybe to open up this discussion, I would love each of you actually to share, like, what do you think, what have been the key drivers of this success across the nations? And do you believe that any of those drivers are unique to the Nordics? And Lauri, let's start with you.
Okay. Well, actually, I think it's not one single factor, definitely. There are several, so it's a combination. I would say that probably the most important one, at least for me, when I look at it from Tallinn, is the tech flywheel and getting that moving, or as we like to call it in Estonia, the Skype effect. You probably, many of you have heard that what happened, how the Estonian tech ecosystem got moving. It was like 20 years ago when a bunch of Estonian coders, together with some very smart guys from Sweden and Denmark, founded Skype, which was then sold to eBay and then finally to Microsoft, bringing hundreds of millions of euros to Estonia. And then from that money, and not only money, but network and knowledge and experience, new companies got founded that currently are already unicorns and are basically spawning and giving birth to even sort of the next generation or the third generation of new startups coming out of Estonia. And that is the flywheel, that basically the successful exits drive new companies, new startups, and that is, I think, common to all the Nordics, that has happened in Sweden, that has happened in Finland, that has happened elsewhere. Now it's starting to happen also in Lithuania. So that's the first thing. And I think second is what is unique. I think cooperation. The markets, if you look at the Nordic and Baltic markets separately, they are all very small. The Baltic, I mean, my country, it's 1.3 million people. It's a club, as we call it. It's not a real country even by looking at it outside, so that everybody knows everybody, and we need to cooperate. The local market doesn't exist. That is a problem in Poland, that you know, everybody can, you can found a startup and you can start basically servicing a local market. That is not possible in the Nordics or in the Baltics. You might even not find a suitable pilot client for you in Estonia, so that you need to go out from day one, so that you look at the market globally. And that means that you don't consider the next guy who is doing the next startup your competitor, but you, rather than you share experiences, you share the network and you help each other to hack the growth, how to get to the best investors, how to get to the market. So this kind of cooperation is I think, the second factor. And third, I think infrastructure. So that also the governments have been really tech savvy. The sort of the digital government infrastructure has been put in place long before it was introduced elsewhere in Europe. Estonia was also once again a forerunner there, so that we have had sort of online voting already for like 15 years, tax returns online, all the government services, whatnot. And then secondly, also not speaking about technical infrastructure, but also political infrastructure, things like startup visa systems or the e-government system in Estonia, or similar other sort of programs in other Nordic countries as well. So that I think as a combination, I would say the flywheel effect, the cooperation, and then the infrastructure.
I totally agree and see that. Maybe a fun fact, often in the actually startup pitch decks, we see LVH Bank as the first customer of so many companies in the region, which I think is cool, but that's not enough, right? So that's why they are actually going and thinking bigger right away. Gabriel, Pekka, anything to add or disagree? I think probably there are other drivers as well, right?
Yeah, I mean, look, it starts from, I think, Ambassador was mentioning resilience. When you are in a small country where it's dark and cold a long time in the winter, what do? You work. And you believe that actually through work and through entrepreneurial activity, you will improve the lives, your life, your family, your colleagues, everybody. So there's a very different work ethic. I moved a long time ago here, so I know that it's nicer to sit in a coffee shop and enjoy the late autumn sun, but it's not very productive. So I think the one thing is get back to work longer hours. It's gonna take an enormous amount of persistence, hard work, long hours. The problem is that when things are going too well, and I have seen it with some of the successful startups and role models, everybody thinks within 3 years we have a unicorn and we will sell it and we make billions. That's not the reality. Most of the successful companies are built 15 to 20 years. And this 15 to 20 years for the key people is extremely hard work, 24/7. So I think it starts there, and obviously then comes everything else, where the governments can help and so on. But it starts from a super hard work ethic. And I think in this hybrid working environment, I'm not so optimistic it's going to work that way, because, I mean, yes, you can do some of the stuff from home or remotely, but sitting on a boat on a sunny Friday is not going to move the companies to world-class execution.
Mm-hmm. But out of curiosity, if you look at your portfolio companies in the region, do they actually all go for the remote hybrid, or do you see that they go back to the office?
Well, I think you can be hybrid if the work ethic is there. Yeah. I mean, we do enormous hours on Saturdays and Sundays. But I think it's the misconception that startup life is raising millions of capital and then just sort of maneuvering to become a big company. No, it's a lot of hard work over 10 to 15 years.
Gabriel?
So to Larry was saying, basically, he summed in flywheel. And there's also very important that I've seen in the Nordics, very different to other markets. It's quite common for like a serial entrepreneur then to create its own VC fund. But I think that in the Nordics, I've seen it more than anywhere else, people wanting to give back to the ecosystem and to actually become angel investors, and not only investing per se, but also being very active and professional in the way. So it's something that they want to give back to the ecosystem, and they really want to push, not by just doing little angel investment tickets, but to do it also as a platform, and there's tons of angel investors communities, and haven't seen it elsewhere.
You wanted to add something?
Yeah, I just wanted to add that exactly, I do agree with you 100% that also in Estonia is a good example that there's something that is called the Estonian Founders Society. Basically, the majority of Estonian successful founders are members, and they accept all basically the new founders who want to become members there, and that is exactly the place where the ones who are sort of further off on the journey or already graduated are openly sharing their experience. And I think this, what you said, is exactly another thing that they are telling also young guys, that don't think that it's a walk in a sunny park. It's a lot of hard work. I completely agree with you.
And do you actually notice any differences between the Baltics and Scandinavia, or what we have just discussed, do you think
Not
it's universally
no.
applicable?
I mean, obviously, Sweden, Finland, Norway, Denmark to a certain extent just have been doing this longer.
Yeah.
I don't see any difference between our companies or the LPs we have. It's pretty much the same.
Probably, yeah. I think that the work ethic and everything related to that is similar. Obviously, what maybe is somewhat what I would maybe say is that since people in the Baltics have been are more hungry, maybe even we were literally like 30 years ago we had food coupons and whatnot, so that for us this has been maybe even for some period, people from the Baltics have put in even more hours to maybe try to get there faster.
Yeah, that's what we discussed yesterday, right? Yeah. Like Estonian and Latvian saying, like we know if you actually want to have a good life, you need to do something on your own. As an average employee, you will have a very average life, which is maybe not that comfortable in the Baltics, not yet. No. All right, before we dig deeper into what contributes to the success, maybe we can just quickly share with the audience, let's talk about the returns of the private equity venture capital in the region. Like, can you share some information on that? Like, what do you tell your LPs?
So maybe I can say a few words. So first of all, private equity and venture, when it's good and you take a long-term perspective, it's 2x net to the investors. It's not 3x. Everybody promises 3, 4x when they go and raise funds. But 2x net is what they have delivered over the last 30 years in the US. This is what Europe has delivered, and this is what the Nordics are delivering. The question is, how fast do you get to 2x? And that's where buyouts and growth capital are more successful, because they invest later in the company's life cycle, so they can get to the 2x net to the investors earlier. And I think the main thing is obviously that it isn't about one investment or one fund. It's about having a program, delivering and turning the money. The issue that I have seen in Austria in the 30 years that I have been here is that when things are great and valuations go sky high and somebody makes money, everybody is running there. And when things get difficult, people run away. So the normal lemmings effect that we see in all capital markets. Whereas for private equity and venture to succeed, you need to take a 20 to 30 year view. You need to invest into 30 companies or 10 funds and build a program. And the issue is that institutions in Austria, by and large, have not built a program that lasts. And that's a huge difference. Finnish pension funds have been doing this for 30 years. They have the stats of all the funds in the region and across Europe and globally. The big guys now invest 100 million tickets, 300 million tickets into the largest funds on the planet, and the smaller ones invest 2 million, 5 million into the local funds. But it's all about program, long-term perspective and realistic expectations. This is not a quick win business, but it's stable and it delivers anywhere between 15 to 25% IRR, but 2x net. Somebody who promises 3x, 4x, 5x, that's la la land. That's not happening on the planet.
And do you see actually any differences in the Baltics and in the Scandinavia? Because I mean, maybe the net returns are similar. Just wonder whether, like, what's the impact maybe of entry valuations? Are they different in the region?
Well, I mean, the one key difference between the Baltics and the Nordics is obviously that our VC industry is just so small that there are really, I mean, no fund has even properly matured yet. So that the exits are now starting to happen, but still, I mean, what gave birth to the VC industry in the Baltics? I mean, PE is a different case. We've had players like Baltcap around for longer time, definitely, and they are more mature. But VC industry was spawned basically by EIF in the Baltics, and that happened like around 10 years ago. So that the first funds are now should get their exits, and they are doing that. But this is really a too fresh of an industry to say anything about, really. What I can only comment is that when talking about 2x, then the strategies have slightly different outcomes. We don't have good examples from Europe because secondary funds are so seldom, but in the US, secondary funds are performing slightly better than that, historically at least. That, as we know, doesn't say anything about the future, as always.
Disclaimer, right?
There's a disclaimer there. But yes, that is something that that we need to see how the performance will be in the Baltics, because it's too early to call.
Too early to call. I think that's a perfect segue to the next topic I want to touch about. I think you mentioned EAF has played a significant role. Pension funds in Scandinavia have played a significant role in actually creating the sector. So I would love each of you to actually walk us through for your fund. Can you share how your LP base evolved as you went from Fund 1 to Fund 2, Fund 3? Like in our experience, our Fund 1 was really all private money here locally through the networks, and it took, to go to the second fund that you can start to work with more institutional investors. Curious about your story in the Nordics. And Gabriel, let's start with you.
Sure. So for us, we started 5 years ago. We're right now north of 600 million AUM, and we've all done it basically through family offices. How we did it basically, and we also started in Denmark because we had a huge family office over there, which was an anchor investor. And it was all very network related. But we knew that this had to come to an end. Like there's amount of people and relationship you can reach, and I think we've been very successful in the region and globally. But the good part of Denmark, it's basically the support funds. You have basically 200 million the Danish government deploys into venture capital annually, and there's also another vehicle that since 1992 they have deployed 4 billion. So for the next fund and future, while we're still growing, and when we launch Fund 3, we do want to have like all these institutionals, big government, and fund of funds of the region in order to do larger checks and to finalize into big funds faster than instead of just having, we do and we enjoy having all the family office, but for the future and stable growth, that's why also that's one of the reasons we were in the Nordics.
Okay.
Yeah, it's quite interesting how these things have gone in the past 20 years that I have been in the business. So our first fund was a combination of German fund of funds, EBRD, 3i from London, a 5 million ticket from a Finnish government entity, and that's about it. The next fund generation broadened the setup, and we raised quite a lot of money again from other banks, pension funds, insurance companies.
In the Nordics?
Across Europe, I would say again. And we didn't have any investors from the Nordics. The third generation, we got the Americans excited. So we got actually about a third of the money from the US, and some of the investors stayed. And actually, funnily enough, most of the larger investors have been with us in 2 funds. Now, 1 investor in 3 funds. We are getting into Fund 5 now, or generational funds, number 5. So what happened pre-COVID when we started raising the 4th generation was that we realized that there is so much more public money available that the difficulty will be raising enough private capital, because a lot of the fund of funds, there has been mergers or they have disappeared and what have you. So we actually for the first time opened the funds for smaller tickets than 5 million. And that brought a lot of family offices across Germanic region, Eastern Europe and the Nordics. And then we went kind of back to Nordics and raised in total something like 45 million from various sizes of pension funds in the Nordics. So for us, it's interesting. One of the first investors was from the Nordics, and then it took 4 generations of funds to go back to the Nordics.
Okay, we'll dig into that deeper. And Lauri, you are now working on your second fund, right? So
Yes.
curious, what's the difference, Fund 1 and Fund 2? Like how
Oh,
does
wow.
the LP base evolve?
Yeah, that's a good question. As we just discussed yesterday, that one of our current investors, a reputable fund of funds from London, laughed when they saw the structure of the first fund and the fund agreement, the LPA, and they said that it was a nice Frankenstein's monster that we had built, because we simply had no experience in how to do it properly. The fund grew out of angel investing, so that me and my partners, we had been doing that for almost 20 years. Started a long time ago, and there are really nice stories, but I won't dwell into that. But then when the local companies started to get bigger, then we saw that there was a need for secondaries. And I started doing them on syndicated basis. And I saw that just basically calling friends, calling tech founders, calling other people, calling bankers, and saying that, hey, let's buy a stake in Bolt. No one has ever done a secondary deal there, let's do it. And then we did it, for example, a 5 million deal there, a 2 million deal in another place. But I quickly saw that this strategy is so doomed. Now I can see that, yes, I mean, I was so stupid thinking that this can be a business. You have to fundraise the same time when you are doing the deal, negotiating it. You don't know how much money you have. All the investors in your syndicate will ask different questions. They want to be part of the discussion. They want to do their own due diligence and whatnot. So it was just a miracle that and due to my lack of knowledge and understanding of how things work, that we even managed to do anything. And then we thought that, hey, let's try to do a fund. But let's not go to talk to EIF or EBRD, because that will take forever. Let's just do it quick and dirty, try to raise private money, and then see if there's a business case at all. We did a small fund, 20 mil fund, and there was a business case. And then those guys like also Isomer, who first thought that, I mean, let's see what you're going to do, because we are afraid that you are going to buy just anything and at any price. We had corporate finance background also, so that we tried to assure that we will try not to do just that. But then first fund is invested. I think the portfolio is pretty nice. Late stage, also sort of post-Series A, post-Series B, I think most companies, product market fit, scaling up, nice cap tables. So we put the criteria pretty strictly there to do it. So going back to the topic that now we have for the second fund, we have EBRD as one of the anchors. That's their first ever secondary fund investment. As they said, they took a long time to discuss that with us, but now we are there. Then the Estonian government LP SmartCap is there also, and then Isomer. So that these are the three anchor investors. In the first fund, as I said, that was a Frankenstein. We had 90 investors, mainly tech founders from the Baltics, Skype founders, Bolt founders, Vinted founders, guys like that, and also key employees from startups, and some family offices, some angels from Finland, from Estonia, and sort of a really, really big bunch of different people, so that we are getting slightly more institutionalized now as we try to learn how to do things. But unfortunately, EIF cannot join us, because EIF's mandate doesn't cover secondaries. And we have argued that several times with people that, I mean, doesn't make any sense. They can invest in private equity, in buyout funds in Western Europe, which are actually secondary funds. You are buying existing shares, and that is okay, but VC secondaries are somehow not kosher. So that we hope this to change definitely with a new mandate from the Commission.
Well, it could be. And if you now reflect on the LPs that you have from the Nordics, so what are the criteria that they want to see? What are the things that you believe excite them to actually invest in your funds?
Well, I think this is a good segue to ESG, and again, it was mentioned earlier, gender equality and ESG. Out of our LP base of something like 120 LPs across the funds, earlier in due diligences, people were asking, do you have ESG reporting processes? Yes, 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 but nobody went any deeper. And I have to say that that has changed in the last few years, really led by first by the Nordic LPs that we have. They all have been 5 to 10 years ago asking, what are you specifically doing? And they have developed the tools and systems to monitor ESG performance, gender topics and others early on. And now, in the last 2 years or so, EIF has also taken a much more active role. So it seems that the Nordic LPs are much more cautious about it and having proper tool systems, numbers to benchmark these things. And our Nordic LPs, a couple of them, really kind of quarterly check how we are doing on for example, carbon reduction. Ask us, how are you measuring it? Have you now implemented the software tools across the portfolio to measure that, and so on and so forth? So I see a big change there, and I believe it's great. And it's going to be more and more important. The peer financial returns, at least in Europe, are not enough anymore.
I couldn't agree more. In Denmark, for example, this is basically covered under the Article 8 of the law, and we have it over there. Basically, it's been the last 2 years making sure all of the startups are compliant. Because to make it a big summary, of course, for a venture capital fund, it's very easy to be ESG compliant. But in order for the LP, all of the startups underneath have to be ESG compliant. And it is something that a lot of funds have basically decided or said had in the webpage, the ESG. And now it's going to be more prosecuted and more analyzed throughout the whole portfolio. And it's something that we as a fund have been for the last 2 years incredibly focused in order for all to implement in all of our companies that they're ESG, because we're also launching a fund of funds, and the anchor investor, without this ESG certificate, it's literally a no-go. And without an anchor investor, things are tougher. So ESG compliant to the bones.
So basically the returns as number one, then ESG is gaining the importance. What about how important is that the fund is truly then active also in the Nordics with regards to deploying the capital?
Well, I think I would say, there is of course a divide that some investors, obviously, if you are saying you are pan-regional, you are pan-European, you obviously should at least do something in the countries where your investors come from. It's better because most larger private equity firms, venture capital firms, were built by the support of the local financial community. So you need the backbone. If you don't make any investments in that country, you're not really contributing back, and it will be a topic one way or another. So if you don't, you sometimes have with public institutions investing as LPs, you have hard-coded text in the agreements. In some cases, it's a comfort letter from you, and in some cases, it's just the smart thing to do.
Yeah.
There is, with some LPs, you have even sort of the mandatory restrictions in place, for example, with these government LPs, like SmartCap in Estonia or BFR in Poland or whoever they are, so that they always want to see a certain X of their investment being invested in the home country. That can be sort of a double-edged sword also, that while pushing it, you can understand while people are pushing it because they want to make sure that their investment has an impact locally. But for example, if we're talking about Lithuania or Estonian market, if there is if you have like a 50 mil fund and the government wants you to invest 20 of that back in the country, then that might not do good for the portfolio composition. And these are always sort of discussions back and forth that what is a good balance of home investment and what is not. So that with this our current fund, we had to navigate. The waters are quite difficult for navigation because EBRD wants us to invest mainly in Central and Eastern Europe. We want to be invested also in the Nordic area. So, and we have to accommodate the Estonian government's need that we would invest specifically in Estonia, and then there are other investors who have their own ideas of what is good geographically, so that it can be quite tricky.
Yeah, that's when you start to need somebody, team that just manages the side letters and all the restrictions.
True that.
And Lauri, do you actually think that, like, how do LPs from the Baltics and Scandinavia differ? I think there's also maybe different levels of maturity.
Oh, well, definitely. And I think that we spoke about pension funds a bit earlier here, so that what I see is a problem that there's a fork. The Scandinavian and then Finnish pension funds are too big to invest in Baltic funds. I mean, that's a generalization, but almost all of the cases, this is the thing that, I mean, the tickets might start at 50 mil, and that's your total fund size, perhaps. So that's not doable. And in the Baltics, we have the exact opposite problem, that the funds are too small, and their allocations for illiquid assets are already full. So that they might not be able to invest for that reason. So this is for the pension funds. And of course, when we talk about family offices, there's no doubt, I mean, the capital accumulation in countries like Sweden or Denmark or now even Finland have been taking place so much longer that actually there are rich families that can invest and that do invest. Although they might be very conservative and they might prefer their own countrymen when considering investors. I'm looking at you especially, that Finns are especially a tough crowd in that sense. But,
good for him.
But other than that, yes, the family offices are starting to sort of pop up also in the Baltics, but still, I mean, if we compare the absolute wealth, there's no doubt that it comes from the Nordics and not from the Baltics. But still, you know, we have had those nice exits from Wise. Now, lately, just the recent news of Vintage Secondary and also basically still Pipe Drive, other exits, so that local tech money is also popping up, and these are also new and notable family offices in the Baltics.
Yeah, I think there is one notable difference between Austria and then the Nordics, right? That pension funds are way more, or let's say they are active, investing into the asset class. Like, how do you think the tax and regulatory frameworks across the Nordics actually have supported the, establishment of the private equity sector?
Look, I mean, in theory, the same type of structures, LPGP or here GmbH, KKG, or whatever it is per country, can be used for a fund, and these are quite, in most jurisdictions, these are tax transparent. The difference is that international LPs, not just from the Nordics but elsewhere, have been investing a lot already before into Finnish structures, Swedish structures, Danish structures, in addition to Luxembourg and Netherlands and so on. And when you come with an Austrian structure, for example, which in theory would work, first of all, a lot of the LPs internationally are not used to that, so they will be like, oh, well, we need to run extra legal on this. Is it going to stay? What's capital gains? How is that structured, and so on? And I think that has been a bit the experience with Estonian funds when they were first introduced. So I think there is, again, a preference for structures that people know. So that's one thing. But in reality, I think there is another issue, which is how complex is it in practice, which is, do you have the tax advisors? Do you have the people who know? For example, if you have one American investor, that's a completely different framework of reporting and compliance and so on. So the question is, are all the service providers then available locally to do all the compliance and reporting? So that's one thing, and then it's the taxation. What do you actually report? And the biggest thing today, and that has really increased in the last 5 years, our funds have been in Netherlands and now all the funds in Luxembourg. So the auditors, if you are reporting on IFRS and based on that in some countries, this is off the rails. So I think there is an advantage in Austria. If you do a fund here, you do local cap in the formal reporting, so you can keep the companies at cost until they are exited, in principle. Same is possible in Finland, super easy, Luxembourg not. So you need to mark-to-market valuations, and you spend hundreds of thousands a year arguing with your auditors, which doesn't make any sense, because in the end it's what you exit at and not what it's valued at the end of September. So I think there is the whole legal structure and so on. Obviously tax incentives would be great, but in addition to UK, they don't really exist anywhere in Europe of actually reducing your tax burden by investing into startups. So it's wishful thinking. All the startups would like that to happen, all the fund managers would like that to happen, isn't happening.
Anything to add, or otherwise we will move to the future?
No.
Let's talk about the future.
To add up on that, I think it's crucial in order to adjust what we said, the capital as taxation. For example, something that Denmark has done for venture investing in capital gains, it doesn't charge. But for example, for real estate, it does. So it's literally pushing towards the sector of technology. And that's something that you can see in one same regulation, that they are basically incentivize one sector over the other.
So is the capital gain tax lower if you invest in venture?
It's 0.
Wow.
And then on other private equity as well. But for real estate, it does charge anything.
Yeah.
And
Well, that's one thing that might inspire us. Let's look ahead a bit. So we have 5 minutes to go. So what do you think, what will be the challenges actually of the region in the medium and maybe long term if we talk about the Nordics? Gabriel, go
I have
ahead.
one, and it's going to be very, discussive, but what I always say, being I work, as I said, we are Danish based, but I'm Spanish and I work in London, so not very into the region, but we do invest. One thing for me, it's the talent. Right now, it's getting a lot of talent, but as soon as they grow, as populations are smaller, for me, it's education, which they're doing great and they're very educating, and it's going to into that right career path. Instead of the small population, that's what worries me about small markets.
That is one thing. What I would think that take maybe a bit more of a helicopter view. Talent is definitely part of that mix. But if we really want to matter globally, I mean, as Europe, we're not talking about even Nordics or Baltics or some other region here, but as Europe. If you look at currently what the top companies in the world are worth and then where they are coming from, there is no European companies in top 10 market caps currently. There are maybe 1 or 2 in top 20 and maybe like around 10 in top 100. So that this is clearly not that what Europe is really worth. We could do so much more. And that is exactly what my good friend Sten Damkivi, who together with Skype and Wise guy Taavet Hindrikus founded the new VC Plural, what they are saying that they want to make a European GDP level impact with their investments. They have now raised 750 million in 2 years' time. And they want to make that, and by that they mean that they would like to be part of creating one $100 billion worth company. So that, and they think that when you create one such an animal, then in the process you create probably 10 decacorns and 100 unicorns. And we should have that kind of ambition and think the other way around, that what we should do on a European level, that the governments wouldn't restrict us or basically put our hands on the way while people are doing it, and then what we can really do to support this ambition. Getting bigger, growing.
LinkedIn today is full of that, right? Like, what should Europe do now when the US will accelerate?
Yeah. So I absolutely agree that we should actually stop talking about Estonia and Finland and Austria and all
Europe.
the small countries, and start thinking more European. And I don't mean with European thinking about Brussels or whatever you want to call EU, is to start thinking that the teams need to be international European teams. The companies need to be international European. We should reduce the borders even further. That's the only way forward, and I think Laura is talking about this. So we just should worry less about what's happening in each individual country and make the playing field level, and that really starts with regulation and tax and currencies and so on. So the sooner we have a unified European playing field, the better it is for big companies and small companies, and that's going to drive the industry. So
I think that's a perfect final remark for our discussion. Thanks so much. It was very insightful, and thanks for being here with us. Thank you.